Good afternoon, everyone, and welcome. My name is Jenny Costco, and I'm the co-head of Government Affairs for Asia Pacific at Goldman Sachs, as well as chair of the Financial Services Committee of AmCham Hong Kong. I am absolutely delighted to moderate today's session, which is the first in a series of webinars organized by the Financial Services Committee. This series is going to focus on Hong Kong's role as an international financial center and a variety of themes which are on the precipice of change. This afternoon, and as a prelude to Earth Month, we'll focus our discussion on the topic of green finance. This topic has not only been at the core of China's 14th five-year plan, but has also been a core component of Hong Kong government announcements, including in last month's budget. Before we begin, however, a couple of public service announcements. This event is closed to the media, and as we want to ensure an open and candid dialogue. However, the session will be published on AmCham Hong Kong's YouTube site after the event. And a quick membership appeal. For those of you who are not members of AmCham, we highly encourage you to join and become a part of our community. AmCham frequently organizes events for members on Hong Kong, the US, and China, and best business practices. More importantly, AmCham is the principal voice of the international business community in Hong Kong. Now to the program. To kick it off, I am very pleased to introduce Daryl Chan, who will set the scene with some introductory remarks. Daryl is Executive Director External at the Hong Kong Monetary Authority and has responsibility for green and sustainable finance within HKMA, as well as promoting Hong Kong's international financial center development, offshore RMB business, and policies to advance financial stability. As Daryl's time is limited today, he will not be able to take any questions following his remarks, but we may arrange a separate follow-on discussion in the near future for those who are interested. With that, Daryl, delighted to have you, and over to you.
Hi, Jenny, Christine, Grace, Yip Liang, and hi to everyone. Good afternoon. I'm very pleased to kickstart today's special discussion on the panel discussion on green finance. And a big thank you to Jenny and AmCham for taking the initiative to organize this event and put together a remarkable panel and audience. The climate change is one of the most pressing issues in this century. It relates to each and every one of us. And more importantly, what we do today affects not only us, but our future generations. It's an issue that the global community can and should get its acts together. Hong Kong takes climate risk seriously. The government has made a strong commitment of striving to achieve carbon neutrality before 2050. Later this year, the government will update its climate action plan to set out more proactive strategies and measures to reduce carbon emissions. The HKMA is doing its part to help manage climate risk and promote green and sustainable finance. We do this in 3 roles: as a banking regulator, a reserves manager, and a market facilitator. The banks serve as the predominant financing source in Hong Kong. So green and sustainable banking plays a critical role in tackling climate change. In a direct way, it helps banks manage climate risks that affect their financials. And indirectly, banks' lending behavior facilitates the transition of the corporate sector to a low-carbon economy. Under the banner of green and sustainable banking, the HKMA is taking a 3-phased approach to help banks go green. Phase 1 was to develop a common framework for individual banks to assess their greenness baseline. We're now in phase 2, which is to engage with the industry and other stakeholders in setting our supervisory expectations on climate risk management. Going forward, phase 3 will focus on the implementation, monitoring, as well as evaluation of banks' progress. In parallel, we are also working with the banking industry in a pilot climate risk stress test. Secondly, as the manager of Hong Kong's official reserves, the HKMA has incorporated responsible investing and ESG principles in our investment criteria, investment process, and asset allocation decisions. We're also expanding our portfolio of green and sustainable investments. Now, as a market facilitator, we work with various stakeholders to create an enabling ecosystem in Hong Kong to promote green and sustainable finance. In fact, that ecosystem is already taking shape. We're seeing strong growth in the volume and variety of green and sustainable investment options across the debt and equity market, as well as bank financing. For instance, the cumulative issuance size of green bonds in Hong Kong reached $26 billion by the end of 2019. There are more than 40 SFC authorized green and ESG funds that are issued by leading global fund managers. The Hong Kong EX has also launched Asia's first multi-asset sustainable investment product platform called Stage. And I'm sure you will soon hear more from Grace. To raise market awareness and create a demonstrative effect, the HKMA is assisting the government in implementing a multi-year green bond issuance program. Since 2019, we have arranged 2 highly successful issuances of Hong Kong government green bonds, building a yield curve that extends up to 30 years. And very soon, the government will seek to double the ceiling of the bond program to 200 billion Hong Kong dollars. And this will pave way for further issuance of $175 billion in the next 5 years. We will leverage on this program to keep expanding the variety of future issuances in terms of currencies, project types, and issuance channels. We also plan to issue retail green bond as a way to promote public participation in green finance. Another market development initiative is to provide incentives to promote adoption of green finance. We will consolidate 2 existing bond grant schemes into a green and sustainable finance grant scheme. The new scheme will provide increased resources to support eligible bond issuers as well as loan borrowers who seek green and sustainable financing by subsidizing their expenses for bond issuance and external review services. Through the efforts that I just mentioned, we hope to expand the green finance value chain in Hong Kong, enhance our competitiveness, and bring in and nurture more green talent. Tackling climate change requires joint effort. We believe the coordinated policies taken by regulators will provide impetus to the climate transition of financial institutions. So the HKMA is joining hands with other financial regulators and government agencies in Hong Kong by initiating the establishment of a cross-agency steering group on green and sustainable finance. In December last year, the steering group announced its green and sustainable finance strategy for Hong Kong. This strategy is underpinned by concrete action points. For instance, we have made a commitment that no later than 2025, it would be mandatory for the financial sector to make climate-related disclosures that are aligned with the recommendations of the International Task Force on Climate-Related Financial Disclosure. And Hong Kong is the first Asian jurisdiction making this pledge. Also, the steering group aims to adopt the common ground taxonomy now under the development at the international level. This will go a long way in addressing the pain point caused by the lack of common standards for green finance. The HKMA is also actively participating in the major climate-related regulatory forums at both international and regional levels. As an international financial center, Hong Kong is well placed to contribute to global efforts in greening the financial system. In November 2020, the HKMA formed a partnership with International Financial Corporation under the World Bank Group to launch the Global Alliance for Green Commercial Banks. The HKMA is the founding member and first regional anchor for the Asia chapter of the Alliance, serving as the Alliance hub for green finance among commercial banks in Asia. So over the next 5 years, the HKMA and IFC will jointly launch targeted initiatives and campaigns in the region. We will undertake green finance research, provide market insight, tailor capacity building, and training support. The Alliance will also provide practical guidance for banks to develop their own roadmaps to mainstream green finance as their core business. Before I conclude, I would like to spend a minute on what green finance means to the corporate sector. The The impact of climate change on corporates could be multifold. It could be operational impacts and financial loss caused by extreme weather events. It could be caused by climate-related changes in regulation, markets, and technology. It could also be felt through the funding channel when lenders and investors are increasingly focused on climate and sustainability issues. To manage such risks and impacts, it would be useful to first understand where you are. Through the lens of climate risk, take a look at different aspects of your business, be it corporate planning, capital allocation, product development, or even supply chain management. The climate-related disclosures made by other corporates in the same industry is also a useful source of reference. And get the advice of a green champion or some form of external support. In fact, many financial institutions have built their green hubs here in Hong Kong. They offer green products and services, as well as financial solutions that help corporates manage the transition. More importantly, going green has lots of upsides. Adoption of green technologies and solutions will help improve productivity and reduce costs. Climate X help build corporate reputation, improve visibility, and attract investors and clients. Ladies and gentlemen, the green journey is long but rewarding. The HKMA will continue to do our part and collaborate with our partners to make Hong Kong a green finance hub that contributes to global efforts in tackling climate change. Thank you, and I hope you will find today's panel discussion a very rewarding experience.
Daryl, thank you very much for that comprehensive presentation. You covered so many topics in only 10 minutes. We really appreciate you sharing your views on the green journey with us this afternoon. Thank you so much. With that, I'd like to now turn to our panel. And we are extremely fortunate to have a fantastic group of experts with us to share their thoughts. Our panelists are not only extremely well informed on the topic of green finance, but they are also very passionate about it as well. And in typical Hong Kong style, we have panelists joining us not only here from Hong Kong, but also from the US and the UK. Following the discussion, we will have some time for audience Q&A. If you do have a question, please do type it using the chat button at the bottom of the screen. And if you're using the Zoom mobile app, please click participants and then chat. I will select questions to pose to the panel during the Q&A session. Now I'd like to briefly introduce our distinguished panel. First, Christine Loh is the Chief Development Strategist and Adjunct Professor at HKUST's Institute of the Environment and the Division of the Environment and Sustainability. A former Undersecretary for the Environment, a former lawmaker, and the former CEO of nonprofit policy think tank Civic Exchange. Christine is a lawyer by training, a commodities trader by profession, and the author of many publications, and we're extremely delighted to have her. Grace Hui is the head of green and sustainable finance at the Hong Kong Exchange, with responsibility for the development of HKEX's green and sustainable finance program. Grace previously served as COO of HKEX's listing division, and prior to that was with UBS for over 10 years in a variety of roles. And last but not least, Liang Yin is a director of private equity research and China project lead at Willis Towers Watson, where he works with institutional investors to help them allocate to China across a variety of asset classes. Previously, Liang spent over a decade in conducting institutional investment research, focused on a number of themes, including sustainable investment. And we really need to give him our gratitude. He's up extremely early in London this morning. So Liang, thank you again for joining us. So first, I'd like to kick off. Daryl covered a variety of different topics, which I think we'll cover in our discussion. And indeed, there have been a myriad of green policy related developments over the past year. We've had the announcement of carbon neutral targets. We've had in Hong Kong the announcements in the budget, including the Green Bond Program, the adoption of electric vehicles, the launch of carbon emissions trading expected in China in the coming months, among other policies. So really a lot going on. But we'd like to put that in the context of Hong Kong as a green finance hub, as Daryl mentioned, and Hong Kong as an international financial center. So maybe to kick off, Christine, I'd like to start with you. From your perspective, certainly as a former lawmaker and minister, but also given your current role, how should Hong Kong look to position itself to take full advantage of this new policy direction? And I guess importantly, how can the public sector look to ensure that these policies are developed and designed to generate meaningful impact and results?
Thank you, Jenny. I think my first point is just to talk about the policy in China, in South Korea, in Singapore, in Japan, really about net zero. You know, what is it really about? Actually, the aim for carbon neutrality as a policy, right? Policy for many jurisdictions is a complete revolution because our world is powered by fossil fuel. So what we are trying to do is to turn this enormous ship of, powered by fossil fuel with something else, with clean energy. So what we're really talking about is replacing the way we're doing things with something else. And some of that is still to be invented not only technologically and industrially, but also in terms of policy, governance, and administration. So that's really my first important point. So any jurisdiction that you look at, whether it's a big jurisdiction like mainland China or a smaller jurisdiction like Hong Kong, there are two aspects. One, especially if you're Hong Kong, where you're an international finance center, one is that domestically, you are committed to net zero. So your own domestic policies, the projects that you have locally in your country, in your city, you have to aim for net zero. Secondly is with Hong Kong being an international finance center, we have to do all the things that Daryl Chan talked about. And what I liked about what Daryl said was, he very succinctly said that as the central bank, the equivalent of the central bank in Hong Kong, he sees that the HKMA has to play a leadership policy role by getting banks in Hong Kong to do all the things that he just talked about. Because by doing that, you're going to strengthen Hong Kong's financial professionals and sector capabilities to be able to raise enormous funding, not only for Hong Kong, because there's a limit to Hong Kong's own economy, but to raise money for China and the rest of Asia. So it's a complete revolution in the way we look at structuring policy as well as raising finance. And maybe the last thing I'll say at this stage is you're internalizing externalities. And what that means is policy is there to make it more, to persuade people to do things either through incentives or disincentives that is more sustainable. The financial part is to do the same thing so that people who want to make investments are going to favor those that are much greener. So money, instead of continuing to go to fossil fuel investments or less environmentally investments, they're going to be diverted through policy and other means into much more low carbon investments. So that's essentially what green finance is going to be about, and policy as well as driving finance to do green investments.
Thanks very much, Christine. Maybe Grace, shifting gears to you, what is the HKX's response to the new policy developments coming out of Beijing and also the Hong Kong government?
Thank you, Jenny. First, let me say thank you to the American Chamber of Commerce for inviting me to join this panel discussion. Just following on from what Christine said, to realize carbon neutrality, China must mobilize hundreds of trillions of yuan for low carbon investments in the coming decades in areas such as renewable energy, green transportation, green buildings, low carbon manufacturing, and forestry. Both the reduction of high carbon investments and the massive increase in low carbon and zero carbon investments are the tasks of the green financial system. As a responsible stock exchange, we want to demonstrate our strong commitment to sustainability by leading the development of green finance in this region, particularly given China's explosive growth in this area and our role as a super connector between China and the rest of the world. Now, China's outstanding green loans are now the largest in the world, and its green bond market is ranking second. So at HKEX, we launched a new platform last December called STAGE. It is an acronym for Sustainable and Green Exchange. As Daryl said earlier, it is Asia's first multi-asset sustainable investment product platform. We created STAGE for three main reasons. First, we want to increase the ESG information flow between issuers and investors. Second, we want to provide a market infrastructure for sustainable asset classes. And third, to provide an alternative to bank finance and private equity for SMEs. When you go onto the STAGE platform, you will find three repositories. One is the product repository, which is the heart of the STAGE platform, which as of today features 48 sustainable theme products from leading Asian corporates. Over time, we want to increase the scope of the product repository to cover other asset classes, industry in Hong Kong and beyond. It is free to join STAGE, but to address any greenwashing concerns, issuers included on STAGE must provide additional voluntary disclosures on their sustainable investment products, such as use of proceeds and the annual post-issuance reports. This additional information will enable investors to access a trusted, easy-to-use platform for the region's fast-growing green sector. The other repository is the online training platform, where you will find a lot of research materials, webcast videos to help you gain knowledge about the green finance sector and the development. I'm very pleased to say that since the launch, STAGE has already been very successful in attracting green finance issuances. Back in 2016, we only had 3 green bonds, total 10.6 billion Hong Kong dollars. As of end of last year, we had 18 listings, total 66.6 billion Hong Kong dollars. But just in the first 2 months of this year alone, we already have welcomed 13 green ESG related bonds, raising a total of $42 billion. With the launch of STAGE, we are seeking to guide future capital flows to support our society's transition towards sustainability. We are therefore actively encouraging all regional issuers of green and sustainable products to consider application for inclusion on STAGE, which in turn will help build Asia financial markets' own sustainability. Thank you.
Thanks very much, Grace. Moving on to the investor viewpoint, I'd like to turn to Liang, and indeed, there have been a lot of studies out there showing the investment opportunity of the environmental goods and services market in Hong Kong and Greater China and regionally. And in fact, at Goldman Sachs, we recently published a report which showed that there's a $16 trillion investment opportunity in environmental goods and services in Greater China. So hugely, hugely significant. Liang, given all the different policy measures that have been announced, how will investors view these measures, and what, in your view, what do you think needs to be done to attract them to Hong Kong as a financial center?
Thank you, Jenny, and thank you for having me on the panel, and also thank you for acknowledging the early hours here in the UK. But let's look at the bright side. I mean, the chances of my 7-year-old son breaking into the room is, well, I can't guarantee it's 0, but it should be small enough at this time of the day. I think when President Xi Jinping made that surprise announcement at the UN General Assembly in September last year, that China will seek to achieve carbon neutrality before 2060. I think that was seen by many in the West as a huge deal, right? In fact, I remember some even called it the most important event in the global climate policy since the election of Donald Trump. Of course, no events are positive. I'm part of the Willis Towers Watson investment business, which operates in the institutional investing space. And I think from that standpoint, the significance of China's net zero ambition to global investors really has two elements, right? One, I think it provides a very strong policy tailwinds for China's overall sustainable investment practice. I spend a lot of time helping global investors allocate to China. The investment case is indeed very strong, but many investors in the West are concerned about China's overall, ESG practice, ESG development, and which, to be frank, is not yet comparable with global best practice. And that being said, I think it's also very clear that China is catching up very quickly on that front, like elsewhere in the world, compared to their parents, China's younger generations are more aware of social and environmental issues and care more about the impact of their actions on the society. But I think above all, policymakers are absolutely critical in creating what I would call, a positive ESG momentum. In mainland China, the landmark policy dates back a few years to 2016 with guidance for establishing the green financial system. And now we have the 14th, 5-year plan formalizing some of those interim, targets for net zero transition. I think that policy tailwind and that improving sustainability outlook are very important in helping global investors get comfortable about owning Chinese assets from a ESG standpoint. And the second point I would make is that, this is the point that Christine alluded to already. Net zero transformation is nothing short of rewinding an entire economic system, right? I think that its impact will go way beyond just the energy sector. It's probably going to drive many existing business models to the graveyard and create many highly successful, highly profitable new business model, the opportunity you just described, Jenny, in the Goldman Sachs study. So that ought to be very exciting for global investors wanting to allocate to China. I think at the end of the day, as a group, investors are paid to avoid future losers and fund and support future winners, right? I think what is unique about Hong Kong, of course, relative to other financial centers, is, as Grace alluded to, that super connector role. It's that role as a bridge between the East and the West. Many of our clients use Hong Kong-based asset managers to access economic developments over the whole of China, not just Hong Kong. Particularly, I think the stock and the bond connect programs introduced a couple of years ago, I think truly revolutionized foreign access to China's capital markets. So just to repeat the point made earlier, for Hong Kong to become a global leading green finance hub, it should continue to play to its strengths in that space. Thank you.
Thank you very much, Liang. That was a very helpful overview from all three of you. I now would like to focus more on the regulatory developments. And Daryl mentioned HKMA's role in the international regulatory standard setting bodies, as well as the cross-agency steering group in Hong Kong that was established at the end of last year and aims to coordinate the regulatory approach on climate and environmental risks to the financial sector specifically. Maybe Grace, starting with you this time, would love to hear your sense as to the key risks at the moment from a financial market infrastructure perspective, and maybe your thoughts on jurisdictions or regulators that are responding proactively to addressing these risks, and what we can learn from their initiatives.
I would like to say we are responding very well, because at the very last, all the regulators, HKMA, SFCs, and all the agencies here are working together to make a change in climate issues by setting up that steering group. A lot of work is being done by HKMA, SFC, and HKEX and others. So more to come, hopefully, in terms of developing the strategy. I think the physical risks of climate change are powerful and pervasive. It is imperative that the market participants in this financial market to understand and to manage climate risks, to protect themselves from the impact of climate change, and to align with the global sustainability agenda. So as Daryl mentioned earlier, the Hong Kong finance regulators will be enhancing climate-related disclosures, and it will increase the coverage of mandatory TCFD, the Task Force on Climate-Related Financial Disclosures, for all relevant sectors. Those are financial institutions, asset managers, security firms, insurers, as well as listed companies by 2025, following the UK. So that more information on on how companies and assets will be impacted by climate change is available in the financial markets to support informed capital allocation and to promote market discipline. Now, many investors already consider environmental, social, and governance factors in their investment decisions and are channeling the funds to these green companies. I think the problem with water and climate risk is that they feel very far in the future, but actually these risks are here today, as we saw what happened in Australia, New South Wales last week. They are material and disruptive, which means we must start factoring these factors now, not later. At HKEX, we believe that to better manage ESG risks and to grow the green finance market, there must be better ESG disclosure. Since 2016, we already require every listed company on our exchange to publish ESG reports annually. Last year, we upgraded our disclosure requirements to require a new mandatory statement from the board of directors on how they have considered ESG matters. We have also enhanced disclosure requirements on climate-related issues and setting relevant targets in relation to environmental KPIs. These amendments represent a shift away from reporting to management. We want to put the focus on board leadership and accountability of ESG. We believe all these new requirements and guidance should significantly improve Hong Kong's regulatory framework for ESG governance and disclosure, and position HKEX as a pioneer in driving ESG disclosure in Asia. I would like to mention a quote by Dr. Mark Carney, United Nations Special Envoy for Climate Change and Finance. He said that there are $400 trillion invested in capital markets, and that money can be invested to do a great deal of good. The biggest risk is inaction. Thank you.
Thank you, Grace. That's an excellent segue to the next topic, which is on investors. So again, turning to Liang, how are global investors incorporating all of these risks into their investment framework? I guess especially given that some of the regulatory standards, taxonomies, and so on are still pending. And how, in your view, do you think investors can help countries achieve their net zero ambitions?
Thank you, Jenny. I think it's fair to say that investors have become, investors globally have become increasingly aware of the risks of climate change on their portfolios. That journey normally starts from collecting emission data on their investment holdings. Therefore that ESG disclosure point Grace alluded to is very important for us. And then moves on to understanding the climate risk exposures, across various asset classes and geographies. Many of them set up a goal to decarbonize their investment portfolios in a way that is consistent with these country net zero pledges. And we are advising as owners not only to just agree on that end goal, but actually set up a decarbonization journey plan to monitor and to manage that, that path. The thing that I would like to mention is that, portfolio decarbonization is a great start, right? But on its own, it doesn't solve all the problems. Shifting to a portfolio that is lower carbon intensity does not necessarily mean investors contribute meaningfully to addressing climate change. You can simply achieve that by replacing, stocks of an oil company with those of a tech company but arguably the oil company will continue to dig oil out of the ground and burn it, regardless of your trading activities. So in that regard, I think there are more effective tools that we can access as investors. One of them is being an active owner, and working with other owners and to actively engage with the invested companies we hold in our portfolio and use our collective power to effect change, to make a real world difference, not just to make a difference to our own portfolios. That's really driven by this belief that shareholders who own and who profit from, corporations that pollute are not just, bystanders. We are active participants in the system, and we need to accept the responsibility that role brings. And the second tool is really kind of, channeling capital into, climate solution space. Of course, I have already mentioned, net zero transformation is a huge undertaking. The International Renewable Energy Agency estimate that to transform the global energy system, we need an investment of over $110 trillion, $110 trillion, right, before 2050. So who's going to fund that? I think investors are no doubt going to be an important source of funding. Now, I think you might be surprised by this, but I'm going to argue that the investment industry in its current configuration is not yet capable of delivering that. There is a important difference between managing portfolios of securities, trading these securities in the secondary markets, and providing that that primary funding to, say, a new renewable company to increase its solar capacity, for example. The simple truth is that the current industry infrastructure, I'm talking about investment industry here, is really set up to do the former rather than, and that new primary investment is a tiny, tiny part of current activity. In conclusion, we need to massively up our game. Thank you.
Thanks, Liang. So a long way to go, it sounds like. Christine, would love to get your view on policy coordination. We've talked about regulatory coordination with respect to risk, but in terms of policy coordination, what, in your view, do you feel is needed not only to mitigate the risk we've been discussing, but also to incentivize the funding that can help transition to a low carbon economy?
Right, that's a really great and important question. I mean, first of all, I do want to say that, Hong Kong is a part of China, and China is the 1,000-pound gorilla here. The transformation of China, not just in terms of net zero, but in terms of also biodiversity, also in terms of circular economy, transforming the whole of China's manufacturing activities, and a lot more. These are all things that are on the table that requires fresh funding. So the role of policy is, for example, China, because there are state-owned enterprises, do you want to invest in them in the future? Well, if the policies are there, and even though they might be in fossil fuel at the moment, but they're going to transition away from that. So, the innovation that will come from even existing players in the market that are heavy in fossil fuels, are first of all, are important, that transformation. Secondly is, for example, in Hong Kong itself, we have a high level of, let me pick public transport. We have a high level of public transport trips every day, the highest in the world. But if we're going to go forward, so for example, if we're thinking about the bus companies, which are privately owned, what will they need? What kind of policy support will they need so that they can transform from running diesel buses to something else? And it isn't just about buying the assets. You need policy planning, you need urban planning, Are they going to go for hydrogen or are they going to go for batteries? I mean, these kinds of decisions, not just for Hong Kong, but for other cities and jurisdictions, are exactly the kind of things where you need the government of the day and the private sector to really do research, to talk very carefully about it, and to plan something forward. And this is going to be an ongoing relationship, from year to year, from administration to administration, because we won't get to net zero. We won't have circular economy, from today to tomorrow. We're just talking about it at the moment. So we need long-term commitment, long-term ability to build the kind of engagement between public and private sector to actually make these transformations on the ground. And the last thing I want to say, and this I think is so important, is where the public sector is willing to move, like Daryl said, Hong Kong's financial regulatory bodies are moving, but we need them to be really able to communicate it very well. First of all, to the local people, that this is a revolution happening, and then to communicate to customers and to the international community, because as a Hong Kong international financial center, we aren't just serving the people of Hong Kong. As the financial center, we are doing business with China and the rest of Asia. So the ability to communicate well, the ability to fuse a kind of vision as to what Hong Kong is going to be able to do for itself, for China, and for Asia Pacific is also really, really important. And then China are experimenting with things like emissions trading, is rolling out an emissions trading scheme, as you mentioned, Jenny, at the start. It's also now entering into trading energy, trading electricity. These things will continue to grow in China and be developed. So if you're sitting in Hong Kong, China is not quite yet trading derivatives. What kind of policies will the SFC, for example, make so that perhaps emissions trading of derivatives, how can they work with the authorities in China so that perhaps Hong Kong has a role in doing that? And then what about the private companies? Will Hong Kong companies based in Hong Kong, the CLP, the Hong Kong Electric, I mean, these companies, do they want to be part of the national trading scheme? Do they see that there is actually a benefit for them long term? So far, they have not wanted to, and Hong Kong is not part of that scheme. So these are all actually quite complicated things that we need not only our regulators, but our policy makers sitting in government to think about.
Christine, thank you. You touched on a number of issues, and market mechanisms, in fact, is our next topic. So I do want to jump to that. And we have a plethora of different options that have been put forward: the Chinese emissions trading scheme, the launch of carbon futures, the new carbon futures exchange in Guangzhou in the Greater Bay Area. And in the EU, we've seen announcements around a possible EU carbon border tax as well. So all in all, different policy tools that are really focused on setting a price on carbon. I'd like to open up this question to our entire panel from a policymaker, market practitioner, investor, market infrastructure standpoint. Would love to get your view on these developments and how you view Hong Kong as positioning itself to take advantage of them. Christine, you started to talk about this a little bit, but I'd like to maybe dive deeper and hear views from the full panel on it as well.
Maybe I will start, Jenny, if that's okay, and just again follow from what Christine just highlighted also. I think it's important to note that the central government has already designated Hong Kong as the green finance hub of the Greater Bay Area. So Hong Kong is also part of this newly inaugurated Guangdong, Hong Kong, Macau the Green Alliance. And the alliance aims to promote research and to incubate green investments that will benefit the Greater Bay Area by leveraging green investment demand in Guangdong and the green finance capacities in Hong Kong and Macau. The alliance is supporting 5 green finance related projects. 3 of them are led by Hong Kong, The Green Building Project, which aims to create green finance opportunities in the building industry. There is a blockchain solar project, which aims to deliver innovative funding structures and new classes of digital sustainable investments to accelerate solar energy projects. And Carbon Connect, which seeks to establish a carbon marketplace for cross-border trading, which hopefully will lead to the derivatives market that Christine mentioned earlier. The carbon market is important because due to the regulated companies seeking offsets to meet their emission compliance obligations and others wishing to achieve their decarbonization goals, this has created a surge in demand for credible offsets. We know that China is the largest carbon emitter, but it is also the largest producer of wind and solar energy. China wants to set up a market that's credible. And I believe at some point they will have to link with the rest of the world, and those who are short in the rest of the world can buy these less expensive Chinese allowances, and that will potentially drive the price up. The potential of the Chinese market is this. You've heard about the national schemes, and the power sector will be the first sector to be included. Just looking at the sector alone, it's going to be twice as large as today's EU ETS market. And I believe that the finance sector, we have a role to play here. We can take the lead to develop the carbon market, and giving a key function of ours is to mobilize global capital to participate in the China carbon market. Therefore, Hong Kong has a huge role to play in both the voluntary carbon market being worked on by Bill Winters and Mark Carney, as well as the Chinese compliance market. Thank you.
Thank you, Grace. Christine or Liang, any thoughts on that?
Maybe I can come in from kind of, again, an investor angle. First of all, kind of personally, I believe that putting an appropriate price on carbon is the most powerful lever the society can pull to address climate change. It's kind of economic 101 tells us, if you can't leave that with the market, because by definition, externalities are external to the marketplace. And I would probably argue that the history of climate change is really a story of market failure, where corporations were allowed to make inflated profits, and investors were allowed to earn inflated returns because the true cost of producing those profits and returns were not correctly paid. And I think an appropriate price on carbon, whether via a carbon tax or a cap and trade, market clearing mechanism for carbon will change that, right? And I think the incentives and the behavior will change as a result. What this all means to investors, I think, is really a major catalyst for repricing of the financial assets we hold in our portfolios, and that is a substantial risk we need to manage, right? It is part of the climate transition risk assessment that more and more investors are doing. And at the risk of oversimplifying, investors need to ask themselves this question: that is the asset I'm holding worth more or less than the price that being held at, in a range of scenarios, to which various levels of carbon price are attached. I think investors have started to embrace this belief that the question is not if governments will act, but when they will do so, and what policies they will use. So just boarding up the framework a little bit, the carbon pricing is really one of the inevitable policy responses, to borrow a term from PRI, that investors need to grapple with. We have seen other policies starting to emerge, the ban on coal, bans on internal combustion engine cars, et cetera, et cetera. They're all going to have a great impact on financial markets. So investors, choice is either we proactively manage those risks and adjust our portfolios before market mechanisms forced us to adjust, by which it will be too late, right? Or take a big hit on the value of the assets. In terms of what Hong Kong can do, again, I think eventually the need for global carbon price, I think, is obvious. Otherwise you will end up with heavy, emitters just moving to regions where they don't need to pay for carbon, and nothing really changes for the planet as a whole. So I think that in that regard, Hong Kong can certainly, contribute to that global effort, working with other jurisdictions. Yeah, thank you.
Yeah, Jenny, can I just add one more comment here? I think what we need to do ahead of time, right? So the Hong Kong government needs to think about whether Hong Kong is going to pass a climate change law. No doubt one day on the mainland, China is going to pass such a law. The UK has already passed such a law, and I think you're going to see other jurisdictions do the same. Secondly is China is going to have emissions trading, but it could also impose a carbon tax in many other areas. So I think it's not too early for the financial secretary actually to think about how Hong Kong may impose a carbon tax locally. Now, thirdly is the EU has been talking about imposing a carbon border tax. Now, this is something that I think between the EU and China and other parts of the world should discuss. China is the ultimate manufacturing and trading economy. So in fact, all these years, China has been manufacturing all kinds of things for the rest of the world. And in a way, it has sucked in a lot of carbon and spewed out a lot of carbon to be this global factory of the world. Now, China is going to improve on the way she produces things. We already mentioned circular economy and so on. So as China continues to improve in this, but if the EU, for example, is going to continue to import a lot of things from China, the tax, if they were to impose a tax on Chinese products, what is it really for? Is it that they want to make their own importer pay? Who's really going to pay for the tax? Or can they think of some other kind of collaboration between the EU, for example, and China, not just on taxonomy, because that is what they're already trying to agree on, how to define green, but also as they trade, how they can maximize certain efforts for the benefit of all. So, I'd like to think Hong Kong's regulators on the financial end, as well as the government itself, together with the mainland authorities, to really work together on this, because this is also going to be one of the perhaps few areas where EU, US, China can work together, because let's not forget, we are entering a rather difficult phase of geopolitical shifts. There's a lot of arguments, and we've seen it just really in the last week between US and China and the EU. They've all agreed climate change is one area where they can collaborate. So I really think it's incumbent on everybody to really think hard about how this could be done.
Thank you, Christine. That's an excellent point, and I'm going to come back to that point later on, actually, with the panel. We do have some excellent questions coming in from our audience. I'd maybe like to turn to those for a minute. And Christine, actually coming back to you, one of the key themes that emerges when we talk about Hong Kong as an international business hub or financial center is talent, and attracting talent and growing talent within Hong Kong. One of the questions is what Hong Kong universities are doing to help nurture talent in the area of sustainable finance, green finance, but also, Christine, to what you were talking about before, policy planning, really forward-looking from a government process. Would love to hear your thoughts on that.
Sure. Well, I'm part of the Hong Kong University of Science and Technology, and there we have spent actually the last year really thinking about how universities itself should align better the different disciplines and the different schools, because green is not just about the business school. Green is about the engineering school, the science schools, the policy schools. So I think the winners amongst educational institutions and professional training is where those things can come together. So I think we are going to see in Hong Kong degrees in sustainability and green finance. So I think that would be very good. Secondly is Hong Kong actually has excellent professional bodies, whether we're talking about engineers or accountants and lawyers, that big support group that goes with finance. And I think those people are now on the march as well. And the sooner that, you know, all these stakeholders can come together and talk about actions that they're going to take to strengthen Hong Kong's manpower, I think that is already beginning to happen, because frankly, you know, HKMA and SFC and Hong Kong Exchange are requiring things, because they've already said in the next few years, this is what we're going to demand. So I hope they will continue to push very hard there. And then I think my last thing is to repeat, you know, my example on buses and taxis and so on, right? You know, sometimes it's not just about the technology. So when can we buy a new electric bus or a hydrogen bus? Actually, you need to stick many things together to make it work on the ground. And the most difficult thing sometimes is to say, well, you've got to change your present business model. You know, so in order to do that, you do need government, you do need the private sector that owns the asset, and you need the financiers to kind of really agree on, well, what's your future and how can you get there? And I think if you can come up with a credible position, there's lots of money around, as Liang told us, that people want to invest in something new. But if you're not able to do that, if you say, well, I'm just going to carry on doing what I'm doing because I'm afraid to change, then I think you're missing out on a lot of opportunities.
Jenny, if I can just make one
Please.
extra point on that, is that you know, in the UK, the CFA Institute actually has recently launched a new level 4 certificate in ESG investing, and that really delivers the kind of the knowledge and the skills, you know, required by investment professionals to integrate the ESG factors into the investment process. And I believe that's kind of the first, first qualification of that kind in the UK. Yeah, so that maybe that's an additional resource for people who are interested in that space.
Thanks very much, Liang, for that. I'll maybe stick with you and Grace for the next question, which is focused on the green finance portfolio for investors. We heard Daryl talk about the impact of climate change on the corporate sector, but then we also have interest from retail investors. He talked about the retail green bond that the HKMA is looking at, and so on. From both your perspectives, what can companies do to help their staff who are interested in investing in green finance, sustainable finance products? How, you know, what role can companies play, you know, to help their staff or help incentivize this type of investing?
Maybe I'll start. Thanks, Liang. At the moment, you can go onto stage to learn all sorts of green finance, sustainable products. But for Hong Kong, we are looking to actually your member firms and financial services firm to help develop the green finance product space, because we have green bonds, we have green loans, and you know, sustainability-linked loans and all sort of loans and bonds, but they are not really for retails. And so we need to start scaling to other types of asset classes, like, you know, equity, structural finance, and derivative products, particularly linked to climate-related metrics and outcomes. And education, SFC is doing quite a bit of education, and so is HKMA and HKEX. So we will continue to educate the market, but we need products. And on that front, we do talk to the MPFA, which is our pension fund scheme authority, you know, to start looking into, you know, more choices for scheme holders to pick on from the ESG products perspective. Thank you.
Maybe just a point I would add is that, you know, this importance about, you know, education, of course, as Chris already talked about, and disclosure, you know, in a way that in the sustainability space, there's a lack of a science-based, you know, accounting standard. You know, means sometimes investors need to rely on unregulated ESG data sets for their decision making, and that's a big challenge for institutional investors, let alone, you know, retail investors. You know, how can they tell whether, you know, the product they're investing actually creates the real impact they desire, right? So in a way, that's, you know, we're into the territory of greenwashing. You know, how do we address that? You know, greenwashing has probably many forms, there's a kind of, saying and the gap between what you're saying and what you're doing, and the gap between what you're doing and the actual impact you're creating. So at the end of the day, I think it's important for, the investment companies that launch this product to demonstrate that real world impact, not just use ESG as a risk management tool or a kind of new platform to sell more products.
Thank you.
I do want to make one point. Universities are not yet seriously thinking about how to contribute to building this talent pool. And my questions really to the universities is, where do you want this kind, what Liang talked about, where do you want this kind of training to sit? Is it in your accounting school, or is it somewhere else in your business school? I don't think at the moment there are courses, for example, in accounting schools, which really teaches how people will approach disclosure. I mean, of course, we don't have a fully worked out set of way of doing things like, we have for traditional profit and loss accounting. But if we look 10 years down the road, this is the area that is going to have to be developed. So I think the universities, this is where your graduates are coming from, your professional bodies, the associations or the Institute for Accountants. This is where they really need to have the vision and the foresight to start thinking about how they're going to produce a whole next generation of new talent.
Thank you, Christine. That's very, very important. I would like to come back actually to the geopolitical topic that you raised, because it's something that is on my mind and of great interest. And I think really for the panel, for the US, China, the EU, climate change and green finance is one area where they all agree. But where can they collaborate? Where should they collaborate? Where is it needed for them to collaborate? We've seen the US and China appointed to co-chair the Sustainable Finance Study Group at the G20, which sounds promising, but would love to hear your thoughts on this important question.
Well,
and maybe
I think different. Sorry, you go first.
Go ahead.
Well,
okay.
Okay.
Right. Go ahead first.
The US and China have appointed two old soldiers on this. We have Xie Zhenhua and then we have John Kerry. And we know from news report that they have already been speaking to each other and that they're trying to work out something. So I think the G20 group, and then with Ma Jun, who's very well known, he was the economist at the People's Bank of China for a number of years. And today he's the chairman, he's the head of the Hong Kong Green Finance Association. So I think what's very important is to have someone like him to chair that group, has an immediate Hong Kong-China connection. So these are all opportunities for us to start working together in the one area where they have all agreed they can work together. So I think all these governments, whether you're European, American, and from China and Asia, they recognize that climate change is an existential threat for mankind. So here is one area where I hope they will work well together, but also Hong Kong's role. This is what is so special about Hong Kong. Hong Kong raises money internationally, and especially for China and Asia. Hong Kong is working with the TCFD, Hong Kong, as Grace and as Daryl has reminded us, we are able to work at that level internationally. And Hong Kong actually has the opportunity to contribute to making this collaboration, this international collaboration work. So I hope all of us, including obviously our international regulators, can see the importance that they can directly influence to really make things work on the ground for the world.
if I could just maybe add another, maybe probably just to echo the point Christine has already made, I cannot agree more on this point that, global major powers need to work together on this existential risk, right? And Jenny, you asked the question: should the U.S. and China work together? I don't think the world has a choice. This is a global, this is a collective challenge for the planet. America can't do it on its own. China can't do it on its own. EU can't, solve the problem on its own. So it really requires that global, cooperation and collaboration. I, as I said earlier, I spend a lot of time talking to our clients about allocating to China, and I can imagine how often this geopolitical, questions comes up in our conversations. The world has changed. I think we're entering a new world order, and nations are, increasingly divided. Societies are increasingly divided. But if there is a silver lining from the climate change, is that humanity tends to unite when we face a common threat. Maybe that's the kind of the unifying force that can bring us together.
Thank you, Liang. There's been an interesting question raised about the role of technology, and would love to hear views from the panel on how can technology be an enabler to achieving net zero, achieving government's sustainable targets, sustainable finance goals, whether it's some way to also help potentially with investing. Would love to hear the panel's thoughts on that.
Well, maybe I can start by saying buildings. Let's take buildings, and let's take solar panels, right? I mean, these are things that we understand quite well. But what is needed is not so much totally innovative new technology. We have technology in many areas that we need to stick together and find the business model to make it work today. So, for example, many cities in Asia have very tall buildings, and Hong Kong is the poster child of many tall buildings. What does it take for us to think about retrofitting buildings where you can clad the exterior of the buildings with solar panels so that the building itself becomes a generator of energy? How do you fit that system then into your grid with the power companies and make it work, right? Now, that's just one example. We can think of many other examples. But to make that work, you have to have the policymakers there that enables that to work. You have to have the current set of providers, energy providers, to be willing to do that. And then, of course, you need the whatever financial support that is necessary, and you need public support. So you can't run away from policy. So innovation and technology don't take place on its own. It has to be integrated and scaled out massively for it to really be something that can drive innovation forward.
Thank you, Christine. Other thoughts from Grace or Liang?
Let's just take, Christine talked about buildings. Let me talk about the transportation, which is the other biggest emitter. So, the marine sector actually constitutes, 40% of our emission in Hong Kong, the ports and etc. So, we need energy storage technology, for example, to electrify, the marine sector. Electrification is very important, and we need that kind of technology. So again, we need investors like Liang to start bringing in and investing in these developments and innovations, because we need them, and there's not much here in Hong Kong for whatever reason. So how do we bring all these green tech companies to Hong Kong? We don't have startups really in this area. I've been trying to look at whether we need to have a new chapter for for green technology companies. But I've been speaking to a number of private investors and HKVCA. There isn't any here in Hong Kong, but we need to find these green techs. So thank you.
Yeah, so building was picked and transportation was picked, and I would echo that point made by Grace, that investors have a an important role in funding those technologies. That's absolutely one of the key focuses of ours, in particular in the private market. Working with asset manager partners to scale up some of the the technology that's proven to work in those space, the transportation and the building, et cetera. Maybe I can just spend 1 minute talking about another type of technology, which is kind of negative emission technology, that the type that can help suck carbon out of the air. I personally believe that we can't win the war of climate change without those negative emission technologies. But the challenge in there, I think, is that private sectors, invested in the climate solutions are, many of them are not comfortable about taking that technology risk, right? A lot of things that we are doing is really about supporting, scaling up the proven technologies, building an EV car or kind of a EV charging infrastructure that, help, green the transportation system. And the project in the negative emission technologies are, probably very capital intensive, and the revenues are policy dependent. So I think that's another area where the public sector and the private sector need to work together to address that funding needs.
Can I add a perspective here? Hong Kong has many ship owners, and they are also struggling to think through what the new generations of ships are going to be like. China is one of the major shipbuilding economies in the world. So one driver, and I have to declare, I sit on the board of the Global Maritime Forum, the maritime industry is thinking about that transition. Who is going to finance the new technology that is coming? And is it going onto a hydrogen ship or something else? But also there are midterm retrofittings that can be done. So will some of those financing be done out of Hong Kong, right? So we don't need to be the technology inventor itself. There is a great role that we can play. And I also want to ride on what Liang said. I think he's completely right. So who's going to take the risk of inventing, technology that sucks up large quantities of carbon? Is this another area where the countries can collaborate? So instead of the US doing it on its own, and it has people studying this, the EU and China, this is exactly the sort of thing that if they collaborated, this is a gift and an offer for the world that will make money for somebody.
May I just add that that was a similar concern that we had a few years ago when we created the biotechnology chapter, which I worked on heavily, and we have now become the second key fundraising center in the world for these biotechnology companies. So there are people who are willing to take these kind of risks. We just need to find whether similar appetite will be for the green tech companies.
Thank you. There are lots of great ideas from all of you. As we're nearing the end, I just would like to ask one final question. I'm going to ask that our panelists maybe keep their responses to 30 seconds or less, which I know can always be challenging. But obviously, we're here with the American Chamber of Commerce, has a very broad membership. What can AmCham and its members do, to help advance green finance and to help advance Hong Kong's position? I know it's a big question, but we'd love to hear brief answers from the panel.
Okay, maybe I can start very quickly. I think there are small things, organization can do. In the group I'm part of, we started practice a couple of years ago of serving only vegetarian menu for our events. Of course, that was pre-COVID. It was a very brief move, but the feedback was really positive, so it was encouraging. And the elephant of the room we can't ignore. Over an entire year into COVID, we all know for a fact that we don't have to fly around the world all the time to conduct our business. So maybe that's another thing for companies to think about.
I would just repeat what I said earlier. I need, your member firms, financial services firm, to help develop more a variety of sustainable finance products, and also need member firms to help fund the development of new energy resources, innovations arriving for the need to tackle emissions and manage carbon, as well as the reforms in food systems, as Liang just mentioned. Thank you.
Well, there's one thing the companies themselves can fully control, which is practice what they want to preach, which is ESG reporting, their own disclosure, get that right, and do that at the best level that they can, so that they become leaders in that area, so that they can showcase to others.
Thank you all. Very, very, very sage advice. Before we formally conclude, I have a few thank yous to several people involved in the success of this event. So first and foremost, I'd like to thank our speakers, Daryl, Christine, Grace, and Liang, for your insightful comments and thoughts today. I truly believe we could sit here all afternoon and continue the discussion, but I feel like we only scratched the surface, and it was certainly jam-packed with lots of fantastic insights. Second, would like to thank my fellow Financial Services Committee members, Roger Steele and Jenny Blanc, who were critical in organizing this session, as well as Rebecca Lenchner, Remy Lopez, and Dan Werles, who served with me on the working group for this series. And finally, to the dedicated AmCham staff, Queenie, Jono, and Ryan, did a lot of behind the scenes lifting, really grateful for all your efforts. Finally, I'd like to ask the audience to keep an eye out for our next event in the series. It's a 4-part series. The next topic will be asset and wealth management on Friday, the 27th of May. So further details to follow on that. And I'm sure we'll have a lot to talk about. So wishing everyone a fantastic Friday and a great weekend and a happy Earth Month once it starts next week. Thank you so much for joining us this afternoon.
Thank you. Bye-bye.
Thank you.
Bye.